Good morning, everyone. My name is Ebenezer Demensa, and I'm a training coordinator at the Temple Small Business Development Center. The Temple SBDC helps small businesses start and grow. We do this through our no-cost consulting webinars such as this and other training programs. We are proud to be part of a nationally accredited network of SBDCs with over 1,000 centers across the United States. You have joined us today for a webinar session dubbed the Year-End Power Hour. Five keys to year-end finances for new year success. A follow-up email will automatically be sent to all attendees within the next 2 days of completing this webinar with all materials and then links. All attendees are muted currently. However, we encourage that you post any questions or queries you have in the Q&A and chat box. Now, I'll turn over the presentation to Gregory, who will be our presenter for today. So, Gregory, you have the floor.
Thank you, Evan, for that very nice introduction and orientation for everybody. I will say right at the beginning, I do intend to use the chat a lot, starting right now when I ask, can everybody hear me? Is this thing on? Just post in the chat, please, and let me know. Great. Thank you, Darren. All right. So we're going to spend an hour together this morning, and I'm going to move very quickly. And I apologize in advance for that. When I started putting this presentation together, there were a lot of things I wanted to share with you. And that means that this presentation is going to be a lot of text, not the best practice, but it's useful information. And my goal is that when you receive slides from this presentation later in the week, they'll be useful to you in the couple of weeks that remain this year. I'm also going to mention that we're doing this workshop again on Thursday. So if you'd like to come again, it will be the same material, but you might see how I adjust things. You likely won't get the slides until after the Thursday session. Okay, having laid that out for you, let's talk a little bit about the Temple University SBDC. Briefly, who are we? We serve small businesses in the Philadelphia area, and we've been doing it since 1983. We're trusted in this community. Our region is Philadelphia and Montgomery County. We help small businesses start and grow. So we provide entrepreneurs and small business owners with the knowledge they need to make smart decisions and prosper. And then you're our business, okay? And we get funding from several partners. Let's talk about those. We're funded by the Small Business Administration at the federal level. We're funded by the Department of Community and Economic Development at the Pennsylvania level. And we're funded by Temple University. And we're accredited member of something called America's SBDC, America's Small Business Development Centers. So what that means is when you come to our center, you're getting the expertise of our consultants like me and our staff, but you're also connected to part of a nationwide network of small business development centers that are across all 50 states and territories like Guam and Puerto Rico. And in Pennsylvania, we have these 16 centers all around the state at different universities, and you can attend trainings that are led by any of these universities. So you're always welcome to go to an online training, for example, like at Clarion Penn West in the western part of the state. If it's virtual, you can go. You could also go in person. I just don't recommend driving 7 hours. So just be aware of that. And by being here registering for this, you likely are already part of eCenter, our system where you can see trainings like this, and you can see all the trainings around the state. Speaking of that, the main services that we provide, the big one that everybody seems to go to us for the most is small business consulting. So we offer zero cost small business consulting, one-on-one with a consultant. And we offer this because of the funding we receive for $0. You sign up, you tell us a little bit about your business in our client portal. Then we'll set a meeting with you, what we call an intake call, where we learn a little more about what your immediate needs are. You know, if you're starting up, it could be that you need an LLC. If you're already in business, it might be that you need marketing help, or you're having trouble negotiating with a vendor, or you need to hire your first employee. We can help you with all these different things that are listed here. There's a QR code right on this slide, which you could scan to help you register for services. The other service that we offer are resources and training. So we do training programs, training webinars like this one this morning, and clinics. And some examples of our upcoming no-cost weekly virtual training events are the one you're at right now. Also, later today, you can go to First Steps, which is about starting a business plan. We also have a workshop today about avoiding common contract pitfalls. Spend the whole day with us. And tomorrow, we have some business resources to prepare for tax changes. This one would be one I would definitely recommend for people who are here this morning if you have time tomorrow to go to that tax changes workshop, because there are some big tax changes in Philadelphia, as well as at the state and federal level this year. All right, so you want to check out our webinars, you want to check out information about the Pennsylvania SBDC and the Temple SBDC in particular, this is the website, pasbdc.org/temple. All right, and just to finish summarizing, our services, we help you do three things: start, grow, and prosper. Our business is you. That's our goal. All right, we will do at least one, if not two of these things we're helping you with. If not three of these things we're helping you with when you come to us. Very briefly about me, here's a picture of me looking very similar. I tried to wear the same clothes, so there'd be no doubt. And I've got a kind of long bio, but let me tell you really what the most important thing is. I've run a small business for 20 years in the city of Philadelphia. I don't run it day to day anymore, but I used to. And I've been there. So with all of you, I think the most important thing for you to know about me is I've been there trying to do what it is you're doing, and have done it for a long time. And whatever you're going through, I feel for you, and I'm here, and I see you and I hear you, even though we're in a webinar where I don't actually see or hear you yet. But you can pipe up, obviously, throughout in the chat, as I've said. So here's our agenda for today. I've just introed the Temple SBDC and myself. We're going to talk about these 5 tasks that you should be looking at before the end of the year from a financial standpoint to set yourself up for a good 2026. The first one, clean up your books. The second, prepare for taxes. The third, improve money systems. I mean, I had to come up with something that made sense here. I think that makes sense. You'll tell me when we get to it if I was right. 4, be smart about year-end spending. And 5, perhaps most importantly, when you get through those first 4 things, set routines for 2026, okay? And I'm going to keep reminding us where we are throughout the presentation, but we're already done with the intros. So let's get into it. Why is this going to matter? Well, you want to avoid April tax panic, okay? Somebody in the chat, tell me if you have ever gone to do your taxes as a small business owner and discovered that you owed more than you expected and had to scramble to figure out how you're going to pay those taxes on time. Anybody been in that situation? Tell me in the chat. This was a regular problem for me the first couple of years I was in business, and my wife also runs her own business, and it was a problem the years that she started her business. We just got the estimation wrong, and it was because we were busy running the business, okay? We had to scramble to come up with a couple $1,000s in March and April. Now, we were able to because we did our taxes early. We knew how much we owed early as opposed to the day taxes were due. It also matters because if you do these tasks, you're going to be able to make better business decisions. And the reason for that is you're going to have more accurate financial information, all right? It's going to help you reduce waste. It's going to start 2026 organized. And the one that always, I think, appeals to people is, I tell folks, if you do all these things, if you make better decisions, reduce waste, start organized, you're probably going to improve owner pay. So as the owner, you're probably going to be able to pay yourself more. That should be one of the goals, okay? So let's talk about cleaning up your books. This is the number one action that reduces tax time chaos and gives you clarity, okay? Cleaning up your books. Here's a step-by-step cleanup for your books. I know I had 5 steps, and I've got 5 steps within step 1. Hold on to your hats, folks. Lots of lists coming at you, but remember, you're getting the slides. So the first thing we want to do in our step-by-step cleanup of our books is reconcile accounts, right? Anybody familiar with reconciling? Anybody done reconciling? You can tell me in the chat if you've done reconciling. All right, well, this may be useful information for everybody. So reconciling is really pretty simple. It's just confirming that all the transactions on your business's bank statements and credit card statements have matching transactions in your accounting system. So most accounting software has a built-in reconciling function. And it essentially brings up, you start by filling out a screen where you say, okay, what's the date on your bank or credit card statement? What was the balance that was owed on that date? Or the balance that was in the accounts on that date, right? And then it will pull up every transaction that's in the accounting system between the date of the last reconciliation and the date you put in as being your bank statement date. And you go through and you tick off every single expense you spent and every single income you brought in. And in theory, you should have matching things on your bank statement. So you should be ticking them off from the bank statement, right? Not just ticking them all like a tedious task, ticking them all when they match, when you can match them to something on your bank statement. And at the end of that process, there shouldn't be anything left over and everything should be in balance. Now, sometimes what you'll discover is you accidentally entered something in the payment system, the accounting system twice, and then you have to delete a double transaction that you entered by accident. Or you might discover you didn't put a transaction in. And so you have to go and add a transaction that didn't show up. Or you might discover that when you were typing, you mixed up some numbers. Maybe a number was supposed to be 1,045 and you put it in as 1,054. Your reconciliation will be off. Okay? Now, the reality is, although it's in software like QuickBooks or Wave, you can also reconcile if you just keep your books in a spreadsheet. All right, and there are a number of ways you can do it. For me, one of the ways that I recommend people do it is if you use the shading functions in cells, you can shade the cells that you've reconciled in green, or you can actually just create a column called reconciled ? And you could literally put X's or checks or yes, the word yes, in as you go through and reconcile. And again, you just need to make sure that you add up everything you reconciled against your bank statement. You go back and look to see if anything's missing, or look to see if anything's incorrect, or look to see if anything's listed as an expense when it should be a revenue, a credit when it should be a debit, right? But this is great. Like reconciling your books, make sure that the information in your accounting system is accurate and matches the information that your bank or your credit card company sent you. Okay. The next thing that you would do when you're cleaning up your books is you would fix categorizations. So again, in most accounting software, there are built-in functions where you have to categorize every transaction. Like in QuickBooks, this is called the chart of accounts usually, but you might just know it as categories. So when you build out a budget, when you build out a chart of accounts, when you build out categories, you're trying to split expenses up into different areas, right? Marketing, rent, utilities, insurance, telephone, telecommunications. You might have areas you break up more. So like within marketing, you might break it up into a few categories like TV advertising, radio advertising, print advertising, flyers, promotional items, like little giveaway things if you work something where there's a table where you give out information. Okay, or you might break down your utilities into 3 different categories. You might break it down into gas, water, and electric. These are decisions you make with your accountant. I'm not an accountant, so I encourage you to find an accountant. If you don't have an accountant, that's actually step 0 for your year. All right. So when you are properly categorizing transactions, this is just going through and looking at all those things, in your year to make sure that they're correct. The other thing a lot of people do is they'll create a category called uncategorized or ask my accountant. I really like the ask my accountant category as something to use throughout the year when you're not sure where an expense should go. It's an easy way of labeling things, but the IRS doesn't want you to give them books that have a category called ask my accountant that have anything more than $0 in it. So use Ask My Accountant if you want to throughout the year. But then this is the time of year, right now, December. This is the time. Go ask your accountant where to categorize some of these expenses that you can't figure out. Get on a call with them for a couple minutes. Because come tax season, they're going to be really busy, and you're not going to want to have them trying to find these answers for you as they're trying to do your taxes. It's going to help you maximize the tax deductions you can take when you give the information to an accountant. And incorrect categorization can also cost you money. Like you can miss deductions, you can end up having to refile. You can also get fines, if you miscategorize things. Okay. Sorry, one last thing I'll say about that. Again, if you're using a spreadsheet, you can create a categories column, and you can type in categories. You can make a little separate spreadsheet where you come up with your categories, and then in that categories column, you can just list things by category. And by the way, that makes it easy for your accountant. If you have categories next to all your transactions in a spreadsheet, if that's how you keep your books, it'll make it easier for them to total everything up. And you could probably figure out how to total it up too. If you can't, reach out. I'd love to have an appointment with you. All right. Next, you want to review any unpaid invoices and bills. There's kind of one focus here on the invoices, right? Is there money you're owed that's past due? Make sure you follow up with people about that. I know it's easy in the rush of the year to forget to follow up about invoices. But you're at risk of not getting that money. The longer it goes after you've done work and someone hasn't paid, the less likely you are to see that money. And yeah, you can get tax deductions for writing off debts that people didn't pay you, invoices that you sent out that you never collected on, but it's much better to have the cash. It's worth more. The other big one is there work you've completed but you didn't invoice for? Get that invoice out. I will be very embarrassed and honest and say that when I was starting my business, one of the things we did was corporate training. And we were very excited when we landed a day of work with Wawa, and we went and did a day of training with Wawa, and we were so caught up in the excitement of doing that we forgot to send out an invoice for like the whole year. And by the time we sent that invoice, it was eventually paid, but it had to be paid personally by the person who had invoiced it because it was too late in Wawa's year for them to even assign it to the correct expense category, their accountants. And that person had to pay us out of their pocket and then ask for reimbursement, which they did get, but it made us look bad, and we never worked with Wawa again. So, staying on top of your invoicing, but even if you have missed an invoice or forgot to send one out, get it out before the end of the year. After you're done looking at your invoices, look at your bills, okay? Are you current with all your vendors? Hopefully the answer is yes, but often the answer is no. So if you have a bill you've missed and you have the money to pay it and it's not going to impact your ability to do other things, if you find all your bills and make sure that you're good, you're covered, get those payments out. If it's the end of the year and you've had a bad year and you discover that you're actually coming up short as the year ends, then make sure you prioritize. Ask yourself a series of questions about which things need to be paid first. I'm going to give you one piece of advice, even though I'm not an accountant. Taxes first. The IRS, the state government, the city government can get very aggressive about unpaid taxes, and there are always penalties, interest, and fines that go along with paying late. Okay, and some of those things can't be removed, even if the state wants to. So pay taxes first. But if you're on top of taxes and you have a collection of bills, you can't pay them all. Ask yourself questions about how to prioritize, okay? It may be that it makes sense to pay vendors who are key to your business, people who you want to maintain relationships with. Think it through if you can't pay everything. And do let folks know that you're aware of the bill and have a timeline for paying it, and apologize if you're paying late. All right, this one is a little more involved. Reviewing your payroll reports. So just out of question, anybody here have employees besides themselves? Just tell me in the chat if you've got any employees. So if I don't hear anything, I'm going to go a little quicker over this. And if I do hear some of you have employees, I'll take a little time to talk about it. All right. I'm not hearing anybody say they've got employees in the chat. So it's important to make sure your employees and contractors have accurate payments for the hours they've worked and the projects they've worked on during the year, right? Contractors are 1099 employees, people you don't take taxes out when you pay them. Employees are people who are on payroll. You withhold taxes and you also pay an employer's share of taxes. It's really important, especially with employees, that you have withheld that tax correctly and you've also paid it over to the correct federal, state, city, entities. Okay. It's important to do that in a timely fashion. So your year-end check should include making sure that all your employees and contractors are classified correctly, that you've taken out taxes for the accurate number of hours those people have worked. So go through, look, see if you've maybe accidentally double paid someone. See if you accidentally underpaid somebody. You need to fix that with a paycheck before the end of the year, or you should try to get an accidental overpayment back. Maybe hopefully that's someone who's still on payroll and you can take it out of an upcoming check so you don't actually have to go ask them to give you the money. You can just tell them that you're going to be deducting it from an upcoming check before the end of the year. But make sure that those amounts are all correct. And then once you've made sure they're all correct, make sure that the account or the place, if it's in your main account where you keep those funds, they've all been paid over correctly and accurately and on time, right? I have a detailed checklist that I'm going to provide Evan, and that'll be something that goes out along with the slides if you're interested in seeing a real broken down process for auditing your payroll and making sure it's correct, okay? The other last thing I'll mention is everyone you hire as an employee should fill out a W-4 form that tells you how taxes are withheld, what their social security number is in this day and age, what their citizenship status is. That's a 9-9 form. You should make sure you have all those things and that they're up to date because you have to send out tax forms to people. And you can send them electronically these days, but you've got to have an email address. You can also send them by mail. You've got to have a correct mailing address. Otherwise, people won't get those things, okay? Same goes for contractors. If you have someone you're paying more than $600 in a year, they're supposed to get a tax form from you, a 1099 form. And so any vendors, if you have outstanding invoices from vendors, but you don't have tax information from them, you should collect that tax information from them before you pay. And you would just want to search for the IRS form W-9 that they fill out and give to you with their Social Security or EIN and the name of their business and the address. Okay. So this last one, so key. Back up your data. Back up your data. Back up your data. Now, we live in an age where most banking and accounting and payroll data is kept on corporate servers by your providers or vendors, right? Like if you have QuickBooks, you probably have QuickBooks Online, not QuickBooks Desktop. If you have, a payroll system, it probably all lives in the internet. But a lot of these systems allow you to export their data as Excel files or what are called comma-separated value files, CSVs. I encourage you at the end of the year to download your data for the year in some form, So whether it's on December 31st or January 1st, or if your last payroll of the year runs on, December 20th, you can download all your payroll for the year on December 20th. But download those files. I encourage people to store them both on a local computer or like a, external hard drive and in your own cloud storage. So if you use iCloud or Microsoft OneDrive or Google Drive or Dropbox, put those files in an organized place. The IRS generally asks you to keep files for 7 years. There may be other people you work with that may require you to keep them longer. You may decide you want to. You may have a policy you have. Just follow your policies, okay? And there is always the old-fashioned option of printing everything off, filing copies of it in a filing cabinet. I have a filing cabinet in the basement for my business where I keep some of my most recent years. All right, so we're done with clean up your books, all right? So let's keep going. That, by the way, was probably the longest section because your books are just so important. But let's talk now about the second key, which is eliminating tax time chaos. So, tax season pain, it's not about April deadlines. It's about being disorganized in January. And so our goal should be that we're actually organized at the end of the month, this month, or in that first week of January, so that we can start having our accountant prepare our taxes as soon as the IRS says taxes are open for filing, which is usually the very end of January, sometimes the first week of February. It depends a little bit year to year. But there are all kinds of reasons for this. Generally, there are discounts on tax prep early on. Your accountant is more available to take time to answer questions, make sure your books are correct. And if you have unexpected tax bills, if you know that in February, you've got 2.5 months to figure out the money if you don't have all the money available. Whereas if you are filing your taxes on April 14th, they're due the next day. If you don't have all the money, you're either going to come up short, you're going to put them on a credit card, which isn't good. You're going to be in a tight spot. So again, my reminder that I'm not an accountant, but many businesses miss deductions simply because they don't have accurate records or they're not organized. So our goal here for our year end is going to be to gather everything so tax preparation is faster, cheaper, and more accurate. And as I said just a minute ago, if your accountant has everything in one place, your turn gets done faster and more accurately, way fewer emails back and forth. So start preparing a Go folder. If we've heard of a Go bag, a Go folder for your accountant. Here's the kind of stuff that should be in there. Have reconciled bank and credit card statements, usually just for the very end of the year. So if your year ends on December 31st, have everything reconciled, but have your bank or credit card statement that covers the end of the year, like either digitally a copy of it that you'll attach to an email or put in a cloud storage folder you share with your accountant, or a physical paper copy of those statements. So usually your December statements for your banking and credit cards. Have a profit and loss statement and a balance sheet. So again, if you use accounting software like QuickBooks or Wave, you're going to have those things already because they're just reports that you can generate in those systems. Or if you give your accountant access, they'll be able to just access your system and pull those reports, okay? If you have employees, all these things with stars are if they apply to you. If you have employees, make sure you have your payroll reports. So when the year ends, you'll be able to file W-2 and W-3 forms, which are about what individual employees were paid. Gather those together. When you send them out to your employees, have an extra copy that you're going to give to your accountant so they can double check that. If you can run a payroll report on all your payroll for the year or a summary of that, have that available as part of your files. You're also required by the federal government to file taxes quarterly for your employees, and you do that on a 941 form. So have each of your 941s from the year, give that to your accountant. And a 940 is a final overall year form that you file that includes things like your federal unemployment tax that you pay as an employer to cover benefits to employees when you lay them off. Have that 940. So all the forms you sent to the IRS related to your payroll and a copy of your payroll for the year. And then similarly, for all your contractors, those people who weren't employees who you paid more than $599 during the year, you have to send them W-9 forms. You're going to give your accountant copies of those W-9 forms. If you have a loan, you're going to give loan statements because you get to deduct interest, but you need records of that. If you've bought equipment or major assets, expensive, big things, right? We're talking, web servers or computer servers, vehicles. Maybe you have a manufacturing business and you bought a manufacturing machine. Those kinds of big expense items, that maybe you deduct from your taxes over several years. You want to have information on what items you have, how long you've had them. If you've been working with the same accountant for several years, they probably already have this information. Still good to give them whatever copy you have too, so they can double check it. If you're a business that pays sales tax, copies of your sales tax filings. If you have licenses and permits, if you have federal contracts, want to make sure you have copies of those available. And then for people who log mileage and deduct vehicle expenses, there are a couple different ways of doing that. You hopefully talked with your accountant at the beginning of the year about how you're doing that, or you have a vehicle and you picked a method for doing it several years ago. Because once you pick a method, you have to stick with it generally, although that's an accountant question. I want to be clear. But make sure you have whatever documentation you have for vehicle expenses you want to deduct. That's a big one, okay? So that's a good starting list of the things that you'd want to have for your accountant, that if you walked in the middle of January and said, hey, my books are all reconciled, my accounting system's all up to date, all my payroll is done for last year, I've filed all my employer taxes and sales tax filings and sent out my W-9s and my W-2s, and I'd love for you to get started on my taxes. Your accountant will love you. They'll absolutely love you. And hopefully they'll give you a discount. You will get a discount in the form of they're going to spend less time working on your taxes. So if they are accountants you pay based on time, all of this will save you money. All right, so that's it. Prepare for taxes, okay? So we're two of 5, and we're about halfway through. So we're running pretty well here. I am going to try to speed up a little bit in the back half. Some of these sections are a little shorter, and hopefully we'll have some time for Q&A at the end. But again, if you're having questions that are coming up as I'm going through any of this, please don't be shy. Pipe up in the chat. If you're asking questions in the Q&A, just be aware I'm not going to see those until I'm done talking, but I will get to your Q&A questions, okay? So we're on to improve money systems, okay? Improve money systems. So a strong money system reduces the amount of time you need to spend on bookkeeping and increases clarity for you. And I am going to give you a suggestion that you might consider of having 2 or 3 accounts, okay? So most people have a lot of early business owners have a single account. Everything goes into and out of there. And usually we'd refer to that as your operating account. You use it to pay vendors, pay for subscriptions, supplies, rent, etc. All your income from customers gets deposited there, whether it's transactions coming over from Cash App and Square and PayPal, Venmo, if it's your credit card payments through Stripe or whatever. You could have other credit card payment processors. I don't endorse any particular processors or systems. And similarly, if you just have cash deposits, like that goes in there too, right? Or checks. I'm going to encourage you that you just keep those things in that account. And then I'm going to encourage you to set up a second account. Go to the bank. The bank will be very happy to set you up with a second account. Set up a tax savings account. This is going to be the account where you put a certain amount of all the revenue that comes into your business in anticipation of needing to pay taxes. And this way you have all that money there before it's due. Remember, you're going to be making estimated tax payments probably every quarter. You're going to have other taxes that, depending on how much business you're doing, you have to pay once a year, every quarter, every month, once a week, maybe even twice a week. If you're a big, small business, there are taxes that you will pay and remit twice a week. So I always tell people it's good to have a separate account where you put aside the money for your taxes. And the best way to figure out how much to be putting in there is to have a conversation with your accountant, which sends me back to step 0 for financial readiness for 2026. Make sure you have an accountant. And then I'm going to suggest that you also set up an owner pay account. This is for compensating yourself and making sure that you do it in a controlled and predictable way. So let's walk through these, okay? The operating account, this is where all the income comes in and all the business expenses go out. So my advice to you is when you set up these accounts and they give you like a debit card, for example, only link the debit card to the operating account. Make it difficult to get at the money in the other accounts. Make it so that you have to write a check or go to the bank and get the money or do a transfer in your online banking system. But don't allow yourself to be out needing to get something and accidentally spend money you've set aside for taxes or money you've set aside for yourself, okay? If you do this, you're going to have all your expenses hopefully running just through that bank account. That means you're going to get a clear view of your cash flow. Do you have enough money coming in to cover your expenses month to month? Is your cash balance growing or shrinking? Okay. It prevents commingling. So we don't want to mix your personal money and your owner compensation money in with your operating money. And this is because for most people who are operating LLCs, you want to protect the wall between your personal finances and your business's finances. That's part of that, excuse me, part of that protection that an LLC provides, okay? This also makes bookkeeping cleaner. So you would know that every transaction in this account is a business expense if you follow this rule, which does require a little discipline. It might mean that you're at the grocery store or at Staples or at Walmart or shopping on Amazon, and you're doing two different carts and checking out with two different debit cards. So you're separating personal and business expenses. And okay, that's going to take a little time, but trust me, it's going to be worth it come tax time. It also reduces overspending. So you're less likely to borrow money meant for taxes or for your own pay if you have money for those things in separate accounts and not as easy to get to, which means that at the end of the day, this is going to improve your financial decision making, because when you look at the balance in this account, you can trust that it represents your actual operating funds, the money you have available to do stuff in and for your business after you've paid taxes and paid yourself. So this account is the heartbeat of your business. Everything flows from this account. Second, your tax savings account, all right? This is where you're going to transfer a percentage of the income you make to cover your federal, state, and local taxes. If you have employees, this might be where you transfer the money that the payroll company tells you is needed for the payroll taxes, okay? A lot of companies will just take it all when they run payroll. Some just tell you what's owed, tell you what balance is due, and tell you when it has to be paid, and you got to hold on to that money. But here's the advantage to this, okay? There's no more tax time panic. So the money is set aside. You can do it on a weekly, bi-weekly, monthly basis, looking back at your sales over that period of time. You can do it whenever something occurs. You do it daily if you want. It makes your quarterly tax payments smoother because you've been saving gradually throughout the whole quarter to make sure you can cover your quarterly tax payments. So a lot of times when you file your taxes, you'll know what your estimated tax payments are going to be for the coming year. So like if I know that my quarterly tax estimated payment is going to be $300, then I know I have to set aside $100 a month or roughly $25 a week, right? So I could do that. I could just transfer that amount of money over every month or every week as I'm selling and having revenue. It also eliminates temptation, right? So it's easy when all the funds are in one place to forget that you've got to save money for taxes. And maybe you're going to go off and overspend. If it's separated, you're less likely to do that. This also means that your cash flow forecasting is improved because you're in your operating account that we just talked about. You're only seeing the funds that are available to you. And you're only operating the money on the business on money that belongs to the business. You're not operating the business with money that actually belongs to the federal government that you're just holding in trust, as they say, until you pay it over to them as taxes. And this reduces the risk of penalties for underpaying or paying late. So taxes stop being an emergency and become a routine. That's the goal of a tax savings account. Now, some of you may stop at those two accounts and say, that's good. I want to separate out my tax money. I'll figure out how to pay myself. Let me tell you now why I want you to have an owner pay account. This account is only for the money that you pay yourself, right? So if you decide that you want a certain salary, you're going to set that money aside to pay yourself on a regular basis. And so for this, I recommend probably setting money aside every week. If you're paying yourself every other week, money will go out every other week. If you're paying yourself once a month, money will go out once a month, but you should be setting the money aside every week as money's coming in is my recommendation. This guarantees that you get paid consistently instead of whatever's left. I went through a period once in my business where I wasn't running things well, and we ran into some problems with our revenues, and I didn't get a paycheck for months, okay? And I didn't have an owner pay account. That was part of it, right? I wasn't setting that money aside, and when I was making decisions about how to prioritize things and whether or not things were an emergency, I was kind of going, well, there's money in the account, in the operating account, I'll pay it. And then I'd get to the end of the month and go, wait, there's no money for me, okay? So it prevents draining your operating account. You're going to set money aside on a regular basis so that when you go to pay yourself, the money is there. And it helps, again, maintain this legal separation between the business and your personal funds. They're getting set aside, and then even you are potentially taking those funds when you pay them in there on your payday, you're removing them from that business account and putting them into a personal account, or withdrawing the cash and going out and using the cash, right? That legal separation is important. And then it makes budgeting easier because your personal life has predictable income. You're setting it aside. And it also encourages you to pay yourself in a sustainable way. So because you're setting money aside, you can look at what's left in your operating account at the end of each month. And if that balance is growing every single month, if you've got net positive cash flow every single month, that's a signal that you could decide to invest in something to grow the business or to increase your pay, to give yourself a pay raise, okay? And that'll help you figure out if you're doing that. So this is how you maintain healthy owner habits and protect the business and sustain yourself. I'm also going to encourage you, when we think about money habits, to think about automating things. So in things like QuickBooks and Wave, there are a lot of options now with AI, where as transactions are brought into your accounting system, and hopefully if you have an online system, you've linked it up so that your bank transactions, your credit card transactions, maybe even your payments coming in from a system like Square or Stripe automatically sync into your accounting system. If that's going on, you can set up rules, and there are now AI helpers that will help you with that. Although, don't trust them blindly, check what they're recommending. But if there are recurring transactions, or perhaps there are invoices you can create in those systems, if you have people you invoice monthly, you might be able to have those invoices automatically be recreated. Like if you have clients who are on retainers, or people who always order the same thing and have told you that. There are also ways that you can automate receipt capture. So there are apps now you can download for your phone where you take a picture of the receipt and it automatically goes into your system, and it asks you to categorize each item in the receipt. What category does it go to? And I just mentioned syncing up like your point of sale or your customer relationship management system. So it pulls things straight out of there into your accounting software. But there's a lot you can do to save yourself time. One thing I do want to stress that I don't recommend is outsourcing or automating the check-in of your account or reconciling it. So I don't recommend outsourcing any kind of audit of your account to somebody else in your company or robot. As an owner, that's something you probably want to keep doing, because if something is amiss or money is disappearing, you want to be aware of that. All right, so there you are, improved money systems, okay? So now let's talk about being smart about year-end spending. I'll just start by saying buying something in December rarely saves money unless you genuinely need it this year, okay? That's my big thing here. But here are a few questions that you should ask yourself when you're deciding, should you buy something now or later? So here are the things you want to think through, and you may need to get an accountant or a mentor to help you with. The first is the tax implications of the purchase. So will a December purchase meaningfully reduce this year's tax liability? or is it better to save it for next year? Sometimes if you know you've had a good year, if you know that you're going to end up owing some taxes and you want to reduce the amount of taxes you owe, having a big expense hit your account at the end of the year can help reduce that. Especially if it's something you know you're going to need, like right at the start of next year. And if you're pretty confident that, this year was an outlier, like you had really high revenue and you know that for some particular reason it was higher than it's usually going to be, then incurring a big expense may be helpful. You want to think about cash flow and liquidity. So even if it makes sense from a tax standpoint to incur a big expense, is that going to hurt your business's stability, right? Is it going to put you into January worried about how to make payroll or how to pay your taxes or how to pay yourself, as we just discussed, right? Or behind on payments with other vendors. You could lose a lot of goodwill there. You could lose employees there, or, your family could be very hungry. So make sure you don't do anything that's going to upset the stability of your business. Also ask yourself about the operational necessity, right? Is the purchase urgent, or can it safely wait until next year or longer, right? So like a lot of contractors will go out and buy themselves a new truck, but they might have a perfectly fine truck. And be aware of, for big purchases like that, like, is it really necessary? I always encourage people to avoid making unnecessary purchases just because they think they're going to save money on their taxes. Another thing is to consider vendor and market conditions. So am I getting a deal now that won't be available in January? A lot of vendors or companies will have sales at the end of the year. They're trying to get rid of old inventory, or salespeople are trying to meet their goals for the year. So they're willing to come down on pricing. That's real, right? So like if you are considering purchasing something and you know there's a deal on it and you know that that vendor or that product generally isn't on sale, but suddenly they're offering you 30% off if you purchase by December and pay by December, then it might make sense, especially if it's something you need early next year, to go ahead and move that purchase up a little bit. If, again, it's not going to affect your cash flow, it's operationally necessary. Accounting and bookkeeping simplicity is number 5. So does the purchase add complexity or administrative overhead? I'd rather avoid this month, right? Especially with large purchases, there sometimes can be a lot of contracting, or a lot of hoops to jump through, or just a lot of work to do. The other thing is big purchases at the end of the year tend to get scrutinized by the IRS if they decide to audit you. So you've got to have good paperwork backing up those purchases. And then the last thing is strategic planning for next year. So does buying something now help me meet year-end goals, or would it be smarter to start 2026 fresh, that this thing I'm thinking about purchasing is actually part of my strategy for next year? So let me purchase it next year, or if I made a budget and I put the money for it in next year's budget, let me wait and do it at the time that lines up with my strategic plan. Okay? So there's a set of things. Here are a few quick examples. So something that is an urgent operational need and you have a tax benefit. That's a great, buy now, right? Or something that's non-essential or optional and you have limited cash, I would defer that purchase, right? Something that's a tax deduction that's small relative to your cash flow risk. So I could buy this thing, I'll get a little break on my taxes, but I might have trouble paying employees in January. I would wait. I would consider waiting, right? Something where there's a big or significant vendor discount and a risk of the price going up in the future, buy that now. Something I'm telling a lot of clients right now is if you need a big piece of equipment, it's manufactured overseas and it's a discount right now, probably a good time to purchase that thing, because we don't know what's going on in the world with tariffs. It seems like things change every week, but big expensive items coming from overseas are likely to go up in cost. Maybe isn't that a cop out on my part? But there's a lot of unpredictability right now. So if you see a good price and you're concerned that that price isn't going to exist anymore, and it's something that you need, buying it now can make sense. Just going to tack on another thing here, a subscription and vendor review. So being smart about year-end money also means looking back on some of your contracts and vendors from the year. So I would set aside time to review your automatically renewing subscriptions. You do this in your personal life too, right? Look at the price you were paying. If you're all reconciled and up to date and your books are accurate and you've had this service all year, go look at what you were paying for it in January. Look at what you're paying for it now. Okay, if the price has changed, have a think about whether that service is still valuable to you or if you're using it enough. And I encourage people, chat on the website with the chat bot, call, email, see if you potentially can have the price reduced. If you have key vendors, if some of your most expensive categories have a key vendor, go and look at your invoice from them, especially if they break it down by like cost per unit or cost per hour service. Compare an invoice from the beginning of the year to an invoice from the end of the year. See if rates have changed. Also look at your usage of that service. So if your usage has increased or your average order size has increased, you might have some leverage to ask for a volume discount. So contact them and ask if they can improve their pricing, especially if this is a vendor or a company where you have a salesperson assigned to you, right? They have metrics around keeping accounts and they don't want to lose accounts right at the end of the year. So there's usually good leverage for getting discounts at the end of the year. And remember, if you don't ask, you don't get. And if you don't use, stop paying. All right. All right. Time for my last thing. We've almost arrived, and we'll have a few minutes left at the end. I'm trying to make sure of that for you. All right. So let's build a sustainable routine going into 2026. Here are a couple things that I like kind of as suggestions for routines. There are different types of small check-ins that prevent you getting overwhelmed and allow you to stay financially organized throughout the year. So one is a weekly thing that I call the 10-minute money check-in. The other is a monthly thing, which is a financial review. And then the other is a quarterly habit, which is forecasting and tax savings. So let me run you through a 10-minute money check-in. This is literally a process that's designed to take about 10 minutes. And if you do it weekly, and if you have a true small business that doesn't have huge volumes of transactions running through it, you probably can fit it in into 10 minutes. If your business is a bit bigger or has a lot more transactions, it may take half hour. So the first minute of your 10-minute weekly check-in is you're going to check your bank balances. Open up your bank account, look at your balances. You should roughly know what your balances are week to week. And then look at your money to see if you have money to pay this week's bills, and look at the transactions from the last week to see if there are any unexpected withdrawals or charges. If money's been withdrawn and you're the only one who has access to the account, or you and another person, and money's come out and you don't know what it's for, you better talk to that other person or you better call the bank. If there are charges you don't recognize, same thing, right? This is a way of catching fraud, whether it's internal or external, someone stealing your information on the internet, early. You want to catch this stuff and report it early. Banks a lot of times have small print that says, hey, if you don't let us know about something in enough time, we don't have to give you the money back. Then in minutes 1 to 3, you're going to review your income and payments. So look at who paid you this week, right? Look at what invoices you have outstanding. Are any of those overdue? Send some reminders. Only takes a minute or two if you do it every week, okay? If you wait until the end of the year and you have to do it for 52 weeks, you could be sitting for 2 or 3 hours. Plus, you're trying to remember everybody from the year. You're trying to remember things from 11 months ago. If you're doing it weekly, you're just trying to remember who you did stuff for last week or last month, right? Minutes 3 through 6, do some categorizing transactions, right? Look at your expenses, categorize them appropriately. Check and see if you have a receipt set aside for that wherever you organize your receipts. And if you're in a system like QuickBooks, like you can tag things as being related to projects or jobs. Just clean up your categorization. And then in minutes 6 to 8, move money where it belongs. So transfer that weekly paycheck to owner paycheck, transfer your taxes to your tax savings account. All right, and then scan for red flags or action items. So Are there any renewals that spiked in price? Are there vendors who are waiting on payment? Do you have tax deadlines coming up in this next week? Make a note of those things. Make sure you drop them on your calendar, set time aside to take care of those things. Okay? That's the 10-minute monthly or the 10-minute money check-in, weekly thing. Here's a monthly financial review. This is a little more involved, but you're doing it once a month. So you should be pulling your profit and loss or your income statement. You should be looking to see if there are unexpected variances or trends. Like look at your gross margin. So, what are you making after you deduct the cost of delivering your service or good? Look at your net profit. Is that stuff where you expected it to be? Is it trending in a good direction? Is it increasing? Is it trending down? Be aware of these things, right? Look at your cash flow statement, okay? Identify your major upcoming obligations. Like, are there big expenses or big bills coming in the next month? And make sure there's enough cash in your cash flow to cover your next 30 to 60 days of business. If you hit a bump in the road or somebody doesn't pay, are you going to be all right? Which gets to this next one, accounts receivable and accounts payable. Check your unpaid invoices and follow up on overdue payments. Do that monthly if you're not doing it weekly. And check upcoming bill due dates to make sure you're going to pay those on time and avoid any late fees, right? Then look at your bank account reconciliation. We talked about this earlier, like trying to finish it all up at the end of the year. Much easier if you only have one statement you have to do. If you reconcile monthly, you're going to resolve discrepancies between your accounting system and your banking system more quickly. Hopefully it's going to be very simple because you're staying on top of things weekly. And then look at key metrics and compare them. So like if you had projections or a budget, look at that and look at where you are and see if you're on target. And if not, flag those areas that you're concerned about that need action, like need you to think about how to make a change. All right, last thing, quarterly. You could do forecasting and saving. So how has my business performed against my budget? Are there revenue projections I exceed? Do I understand why? This is always important. So if you see something different from what you expected, figure out why it's different from what you expected. Understand why, because once you understand why, then you know if you should adjust your forecast for next quarter to reflect the change, right? So if you're making more money than you thought, should you adjust your forecast that maybe I'm going to keep making more money? Maybe I'm going to have more money available to pay myself or invest in my business. Are there expenses where you were over budget? Do you understand why? Same thing. It's not enough to simply note, oh boy, I was way over budget on utilities. Figure out why that is. Oh, well, employees are forgetting to turn off the heat at night when the shop closes. It's money just going out into the air. So if you're over budget, do you need to take corrective action, right? Or do you need to increase your product or service prices? And then what are your expected tax liabilities for the quarter? Are the funds set aside, or if the dates have come and gone, have the payments been sent? So here's one thing I would love for you to do at the end of the day today, which is, ask yourself, what's one money habit in the first 3 months of next year that you want to do? How are you going to track your progress on doing it? And what reward will you give yourself if you successfully build a new habit in the first 3 months of next year? That's one takeaway activity I want to give you beyond this long list. But look at that. It's 8:59, everybody. It truly was a financial year-end power hour. So I'm going to flip over to the Q&A. And obviously, I'll still be open in the chat as well. But let's see if we got any questions that came in. Or if anybody wants to ask questions in the chat right now, please go ahead and do so. And also, please be aware in the chat, we have a link for your feedback, okay? Temple Small Business Development Center has dropped a link there. It's a Google form, it's an Office Forms, Microsoft Office Forms. This is the first time I've run this workshop. I'm running it again on Thursday. If you take a minute right now to fill out this form, I will wish you success and prosperity in the new year and a very happy holiday. And if you don't fill out the form, I will find you. I will deliver a lump of coal to your house. I'm not Santa Claus. I'm just someone who wants your feedback. All right.
All right,
Well,
thank you,
I'll stay on
everyone.
here for a minute. And if
Yeah.
anybody has questions, I'm happy to hang around.
Thank you, Greg.
Thank you, Evan, for being here with me this morning and helping make this all run. All right, we're going to wait until 9:01. If I get no questions by 9:01 from folks, then I will assume that either you all were put back to sleep by my droning on about accounting, or I did such a good job that you feel fully prepared to tackle all these things in the next 22 days or so. All right. Well, thank you, everybody, for your attention this morning. It was a pleasure to be with you, and I hope you have a great day.